America is sitting on $36 trillion of debt. That's a number so massive it's almost impossible to grasp, yet it's still money owed to someone. People often point to China as the big lender, and yes, China holds around $750 billion of U.S. debt. But here's the twist. China itself is drowning in more than $18 trillion of debt, and a lot of that is owed to Chinese banks, the same banks that also hold U.S. debt. American banks, meanwhile, are holding debt from China, from Europe, from just about everyone. The deeper you go, the more entangled it becomes. Every country is borrowing, every country is lending, and somehow the world now owes $300 trillion in total, triple the size of the entire global economy. So the natural question is, if the whole world is in debt, who is it all owed to? The truth is stranger than it seems. Debt isn't just a giant pile of unpaid bills. It's a web, a cycle, a system built on motion. And it's been this way far longer than most people realize. Debt might feel like a modern issue, but it's one of humanity's oldest ideas. Before banks, before coins, before paper money, debt was just a promise. Maybe you lent your neighbor a sack of grain in the spring, and they repaid you after the harvest, with a little extra as thanks. No contracts, no lawyers, just trust. The idea was simple. Sometimes you need something now, but can only pay later. That's all debt really is. Borrowing from tomorrow to solve today's problems. Over time, those small personal promises scaled up. Kings wanted castles, empires wanted ships and cannons, and no single lender could cover the cost. So in the 1600s, England tried something new. Citizens could buy pieces of debt, written promises called bonds, in exchange for interest payments. It worked. Governments could raise huge sums without draining their treasuries or raising taxes. By the 20th century, bonds had gone global. 2 world wars pushed countries to borrow on a scale never seen before, not just to fight, but to rebuild. Then in 1944, the Bretton Woods Agreement made the US dollar the center of the financial system. At first, dollars were tied to gold, but in 1971, Nixon cut the link. From that point on, money wasn't backed by anything physical. It was fiat, created by decree, and that opened the door to a new era of borrowing. From the 1980s onward, global debt exploded. Governments discovered debt could do more than finance wars. It could fuel growth, borrow to build schools, fix roads, lift economies out of recessions. Borrowing stopped being a last resort. It became the norm. Debt was no longer just a tool for survival. It became the engine of progress. Fast forward to today, and the result is staggering. More than $300 trillion of global debt, more than 3 times the value of everything produced in a year. So who's lending all this money? It's tempting to imagine some shadowy figure pulling the strings. But debt doesn't move in straight lines. It moves in circles. Take the US, the world's most indebted country. You might expect most of that debt to be owed overseas, but about 70% of it is actually owed to Americans themselves. Banks, pension funds, insurance companies, and even regular savers all buy government bonds. When you deposit money in a bank, it doesn't just sit there. It's invested, often into bonds. Those bonds pay interest, and when the government makes those payments, the money flows right back to lenders, who often reinvest it in more bonds. It's a loop, money cycling through the system again and again. The same thing happens internationally. About 30% of U.S. debt is held abroad by foreign banks and governments doing the exact same thing. Money flows in, then back out, then back in again. And this system isn't unique to America. Japanese savings fund Dutch borrowing, Dutch savings fund Brazil, and Brazil's savings flow into American bonds. The whole world's finances are connected in loops. And here's the key. Governments almost never repay debt in full. They simply borrow new money to cover the old. It sounds reckless, but it's actually the foundation of the global economy. Debt keeps the wheels turning. If governments stopped borrowing tomorrow, economies would seize up. Think about it. 1 out of every $4 the US government spends is borrowed. In China, it's nearly 1 in 5 win. That borrowed money keeps businesses running, keeps workers employed, keeps consumers spending. Cut it off and the loop flips into reverse. Spending falls, businesses collapse, jobs disappear, the economy contracts. We saw this in Greece after the 2008 financial crisis, when investors stopped buying Greek bonds. The government couldn't borrow, and their economy shrank by a quarter. Wages collapsed, unemployment soared. That's what happens when the debt cycle breaks. Politicians know it. Voters know it, which is why nobody wins elections by promising austerity. Governments keep borrowing because the alternative is economic pain. And sometimes it's not about growth at all. It's about survival. In 2020, when COVID froze economies worldwide, governments had no choice but to borrow trillions just to keep things afloat. The U.S. alone borrowed nearly $4 trillion in a single year. The money had to come from somewhere, and in reality, it came from more debt. But here's the uncomfortable part. As debt piles up, interest payments rise. A growing share of government budgets goes not to new projects or services, but to covering past loans. Debt to GDP ratios that would once have been seen as catastrophic are now considered normal. This works as long as borrowing is cheap and lenders are confident. But confidence can shift quickly. If investors lose faith, interest rates spike, and suddenly borrowing becomes much more expensive. That's when governments face tough choices: cut spending, raise taxes, or print money. Printing money can buy time, but it risks inflation. And inflation erodes the value of savings, drives up prices, and can spiral out of control. Venezuela's crisis in the 2010s is the extreme case. Money printing destroyed the currency until bread cost millions of bolivars. Most countries won't go that far, but even moderate inflation undermines trust. For poorer countries that borrow in dollars, it's even worse. If their local currency weakens, paying back debts in dollars becomes crushingly expensive, sometimes leading to default. And when a country defaults, it can't just borrow its way out. Investors walk away. The economy stalls. So the question becomes, can this system really last forever? Can we keep building on a mountain of debt without it all toppling over? No one has the answer, but people are hedging their bets. In 2025, gold is soaring, up nearly 28% this year alone. The dollar is down, silver is at a 30-year high, mining stocks are climbing. Even the biggest banks, JP Morgan, Goldman Sachs, Bank of America, are predicting gold could hit $4,000 an ounce by 2026. Investors are looking for something real, something solid, as insurance against a fragile system built on promises. Debt has become the engine of our modern world, the loop that keeps money moving and economies growing. But it's also a system that carries risks most governments would rather not talk about. As long as the borrowing continues, the wheel keeps turning. The moment it stops, everything changes.